Hey everyone, so thank you so much for coming in, and it is a special occasion for us today. We actually have Anthony Power. You guys know him, you love him, maybe except maybe the little Mara Piggies may hate him a little bit, but that's beyond the point. But we do have Anthony with us today. We're going to have a lot to talk about. Obviously, we're going to take your guys' questions as well. So Anthony, thank you so much for coming in to join me here on this very first time that we are doing this, I guess, live. And in general, this is the first time we're doing a video together. We've been friends for over probably a year now. We've discussed things kind of in the background on personal occasions, but this is actually really great to have you on. So thank you again.
Thanks for having me, Seb. Thanks for having me.
Yeah, Anthony, can you give us a little background? I know that you're an accountant, and I'm sure a lot of people that follow me also follow you as well, but just people that may not know you, if you could give us a little background.
Yeah, so my background, my career background was joined the military at 17, left at 42. So I had a 25-year army career. During that time in my army career, I qualified as a chartered accountant. Came out of the military and then worked in senior finance roles in the National Health Service in the UK. Did a 3-year role in Kazakhstan as a finance manager for a big oil company out there. Came back to the UK, did a couple more years in the National Health Service, and then I retired at 50. And just not long after I retired, we had the COVID happen, and we were all sort of like locked in for a couple of years. And during that period, I was a bit bored, and I started investing in a few stocks, mainly the FTSE 100 stocks, which are sort of like effectively safer stocks. I wasn't trying to gamble on any speculative stocks, but I did. After about 6 months, I purchased a stock called Marathon Digital, and I put bought a few shares, and within about 4 weeks, the share price had like quadrupled, and I didn't really know what I was getting into. So I had to sort of start thinking, what's Marathon Digital about? What do they do? And realised, they were a Bitcoin mining stock. And there was a UK Bitcoin miner called Argo blockchain. So I did some more research on those, bought some of their stock, did really well in 2021. And after about sort of like 6 months of looking through these mining stocks and the likes of Hive Digital, Hut8, Bitfarms, Riot platforms, I started looking at there's a guy on YouTube called Blonity, and I'd watched some of his videos, and I thought they were pretty well put together, and the analysis was good. And being an accountant, I was always interested in the numbers side of things, and I started doing some tables for him. And effectively, after about 4 or 5 months of doing that, he asked me to come on board and actually, produce all his analytics for him. At that point, however, the Bitcoin price has started to drop, and Blonity took some time away from the space. He'd been heavily invested in a lot of mining stocks up to that point. I just carried on my own, and I started, using Twitter and putting my analysis on Twitter. And then I got a call from Compass Mining, April 22, and they said, we'd like to see if you consider writing some articles for us. And I said, no, I don't do articles. I'm an accountant. I just do some analysis. And they said, look, do your analysis, put it in article format, put some words to it, and guess what? We'll pay you for doing it. And I'm like, wow. So I was doing this for nothing, and all of a sudden, someone's offering to pay for me what I do. So I said to them, I said, do 3 articles for you. And I think yesterday we released or published our 63rd article for Compass Mining. So we've come a long way, and yeah, it's enjoyable. Also in that time, I got to know people like yourself, Sebastian. I got to know Tom from Talking Investing, Bryce McNally from McNally Money. I worked with Will Foxley on some early podcasts out there, and then lately, in the sort of like last 6 weeks, Bryce and myself have been doing a lot more in the podcasting side, and there'll be more news coming out about that very shortly about what we're trying to do going forward. But I think it's been useful in this space, to share knowledge, share what we understand, and work alongside great people like yourself, Sebastian.
No, I appreciate that. Yeah, I started, you're talking about Blonity. That's going quite a ways back. And I actually followed him for a long time there also when he was doing his thing. and then all of a sudden he just kind of dropped off the face of the earth a little bit. It's like, whoa, what happened to Blondie? But yeah, I learned quite a bit from him also, what his metrics were doing, things like that. So it was definitely an interesting period, especially as we got into like the bear market afterwards, and he kind of disappeared from there. But yeah, so it's great to have you, Anthony. I also love Bryce McNally. Follow him. Follow Tom from Talk Investing. We are like a small group here on YouTube and in Twitter, so we all share information with each other as best we can. We help out each other as best we can, and I think it's just a great community for that. So why don't we get into the questions here, and then we'll see where this leads us to. So I do have some questions that are people that couldn't join us today because for one reason or another, but we do have some Patreon questions, and we do have some also YouTube questions. So we'll just get into this. So the first question we have is from Carl. Could we discuss exit strategies? So both of us are invested in the miners right now, right? So Anthony, I'll let you take this. What's your exit strategy with the miners going forward?
So I think if we go back to 2021 and the first 3 months of 2021, we saw, a lot of the miners really, the share prices really rocket in that early 2021. And then again in mid 2021, when sort of had that news come out that Tesla were buying Bitcoin and it spiked the Bitcoin price, got to something like over $60,000, and the mining shares were really doing well. I think towards the end of the year, Marathon and Riot, Marathon I think reached like nearly $80, and Riot wasn't far behind. And people thought there's no end to this, and there was an end to it because straight into 2022, we saw the price come down, and we saw the price come down gradually, month by month by month. And I get the impression a lot of people didn't really, sell all their shares at the what would have been, with hindsight, some great positions in 2021, and others were probably playing, trying to play catch up, coming in late, but seeing the share price drop and then trying to buy more shares, thinking that the only way Bitcoin can go is up. But when you've been in space for sort of like 3-4 years, you start seeing these sort of cyclical patterns. And in 2022, I didn't really buy any shares. I bought a few in 2021, had a portfolio of shares there. In 2022, really just didn't buy because the price was just coming down. I just took my focus on the articles, focused on the analysis, didn't kept my eye on the miners, kept learning about the miners. It's got to understand, go through the financial updates that they bring out, go through the monthly updates, work out who's doing well at the moment in terms of production, who's doing it in terms of cost. There's so much information out there. You go out there and do your due diligence. So in 2023, the start of 2023, I said to myself, I'm going to be, I've gained a bit of knowledge now. I'm going to start looking at, this year as a option to start selling some shares, with the price. And so from February, literally all the way through 2023, at key moments, I was selling shares in some of the positions I had. And, people can actually see I've put the trades for 2023 and some of the trades in 2024 on the Patreon, so people can go in there and have a look at those trades if they want to. They're on there. But yeah, there's like 40 or 50 purchases and sales during 2023. So quite a significant amount, across a section of miners. I have looked at the miners from a valuation perspective. So I'm going to turn around now and say to you that in 2023 I was focused on buying the likes of Bitfarms, Iris Energy, Cleanspark, Marathon, and Riot. I did buy some positions in Bit Digital and TerraWolf, and I sold them sort of like probably by about April in 2023. But the other ones I was buying, and I sold my Cleanspark position in late December, which turns out now to be a really good time to have sold those shares.
Oh, yeah.
I sold some Iris Energy earlier in the year when their share price spiked, but I've kept buying Iris Energy. And the reason I buy Iris Energy is I can see the value in that stock. I've done my due diligence. I look at the valuation of the company. They've got their valuation of assets. So if you look at the assets on the balance sheet, their assets on the balance sheet are greater than the market capitalization at the moment. So if somebody come in there and just bought the assets are worth more than their current market capitalization. And not every miner can say that at the moment. Yep. Riot certainly can't, and Marathon certainly can't. But Iris can. Some of the smaller miners can as well. So they're not alone in that. But I feel Iris aren't a small miner. They've got 6 exahash. They've got orders to get to 11. They've got an option to get to 20. They've got a site with 600 megawatts potential. They've also purchased land to build their next site. So they're already sort of like thinking 4, 5, 6 years down the line. They're going into HPC. So they've got no debt on the balance sheet. So everything's tick, tick, tick at the moment from their perspective. They've got a good management team. So I've just been adding, and not talking big amounts. I had some big amounts in 2021, but I haven't done any sort of like major purchase buying, but buying small amounts, maybe a bit more regularly, and just building a position, as the price comes down. So even with Iris Energy, I've bought some shares this week in Iris Energy. I think I bought some last week as well. Just small amounts, just building the average, yeah, it's you've just got to think at opportune moments, take some profit, take some money put some money on the table, and ready for the next there, because the Bitcoin price, it's volatile, but the mining shares are even more volatile, and Bitcoin can change 4 or 5%, 6%. We've seen it happen since in the last 3 or 4 weeks in a day.
Yeah,
but we've seen the mining stocks up and down by 20, 30% in a day, and that sort of appeals to a certain type of investor. So it can be exciting. People will be thinking now we're in towards the end of January, and all those gains in 2023, and most of these miners were up about 400 or 500% or more in 2023, and some of that's been lost now with the price being pulled back a little bit. Some of these shares are 40, 50% down since the beginning of January. So that means it'll have lost half of that rise through 2023. But is now an opportune time to look at them. The spot ETF has given people some hope that with more Bitcoin being bought, more adoption, and there's not a great amount of Bitcoin out there to buy, but these spot ETF funds, the 10, 11, 12 of them, they're buying Bitcoin every day to boost up their capital. So yeah, an interesting time. Sorry, sir.
Yeah, no problem. As far as your exit strategy going forward, are you going to be completely out of the miners, say like 2025, 2020, end of 2024?
I think 2024, early 2025. I think there's probably got a good year after the halving.
Okay.
So I'm going to be taking profits
on the way up, and then hopefully on the way down as well.
Yeah. And I think learning from 2021, if it's going to be cyclical again. And people will say, "Oh, this time's different." Well, it wasn't different the last 3 cycles. So, but I'm not saying to people to go out there and, you've got to do your due diligence. You've got to be comfortable what you're doing. And I've took some small profits, but as I say, my 50 or 60 trades are on the Patreon. They're all there for people to see. They can see what I've done. And, I've still got, a position now that, we had a nice bit of green on Friday to alleviate some of that red pain we've had for a couple of weeks, and that was good to see. And we know that a couple more days of that, and everyone's back into sort of like happy mode again. But I don't look at prices every 5 minutes like some people do. You've got to believe sometimes in the research and due diligence that you do. So yeah.
And I've had a lot of people that have recently just come on the channel and have started investing in miners because of you and I and others that are talking up the space, obviously, and they got in kind of a little bit at the late stage, I think, and they're kind of like feeling the pain here, which is kind of what we felt before when the miners were going in the bear market in 2022. We've been through that, and the best thing I think you can do is just dollar cost average in if possible. And then my strategy is pretty much like yours, to just possibly sell once we start getting closer to that 12-month mark. We start seeing Bitcoin going up nicely. That's the time we'll start looking to possibly get out of our positions at that point. Okay.
Absolutely.
So next question here is also from Carl. Possible top miner for 2024, 2025. I think you pretty much named those: Bitfarms, Cleanspark, Iris Energy, Marathon, and Riot, right? And
I'm going to say yes. I'm going to say the ones to look out for this year. I think you have to look at Iris Energy.
Yep.
I think you have to look at Cleanspark, because of the Cleanspark, they're at 10 exahash as we speak now, and they're going to be at 16 exahash in February. Now that 16 exahash target should have been end of December, but it's been a 6 or 8 week delay. So by end of February, we should see them achieve that target there, and they've got another 4 exahash to add to that in orders that were done earlier in 2023. So they should get to 20 exahash before halfway in 2024.
Before
That's
the end of
double
first
there
half,
at the moment. So that's perfect timing for the halving. They're going to be like, tier one miner alongside Marathon, alongside Core Scientific, alongside, Riot platforms in terms of hash rate. Iris Energy, they're going to be 10x hash by halfway point of this year, but their valuation is a fraction of these other miners we're talking about. So I think they're a value play. Other miners I like at the moment, I like Bit Digital. I like BitDeer at the moment. The reason I like those two miners is there's more to it than meets the eye. So, we focus on self-mining. You focus on self-mining. Tom does and I do, and my analysis there. But I think there's a role to be looked at in terms of what else these miners are doing at the moment.
Yeah.
So I'd be, saying to people, have a look at BitDeer, have a look at what they do. Their self-mining is about 40% of the business. So when you're trying to compare BitDeer with 6.7 exahash to a peer miner, i.e. Bitfarms or Iris Energy or Cypher, they've got 6% more revenues coming from three other businesses that they have in this space that are very, very profitable from a margin perspective. They've got great margins on those. So you need to do some research. Go and look at the numbers. I'm going to try and put something together in early February to highlight that point on BitDeer.
Yeah.
Bit Digital, very quickly. I mean, we had Sam Tabor, the CEO, on the podcast this week with Bryce, and $50 million a year revenues in their HPC contract. So late to the party. Everyone else in that sort of like space who was already saying how many machines they were purchasing with no customers, Bit Digital didn't announce anything until they got a customer. So, they were late to sort of, but they're actually very early in planning this. And I think, 50 million is half, would have been more than their Bitcoin revenue in 2023. So you have to think, when you're comparing Bit Digital, remember 50% of their market capital going forward is based on Bitcoin mining, and the other 50% is based on HPC. HPC is not correlated to Bitcoin price. So they'll get that 50 million irrespective of what the Bitcoin price is. If the Bitcoin price rises, for Bit Digital, that's win-win-win. Yeah. There's no other way about it. And if it doesn't go up, it's still a win because they're still getting these great revenues. So
the only thing with that, let me add this. The only thing with that is the first year I think is going to be a little bit less revenue side of things because they have to buy all those servers, right? So you're looking at around 30-some million to pay for those servers. But then going forward, it will be definitely much better for them.
Yeah, but they'll pay. Those servers are paid and depreciate over a number of years. So it's not like it's their accounts. The hit isn't in the first year. Yeah. The hit will be over the lifespan of those. They are depreciated, those servers over a period. But the revenues, and they've already started getting revenues, and they were getting pre-contract revenues. So people are saying, yeah, but what about facilities? They have to. No. They've rented facilities. They're paying. They've got a lease, so they don't own the facility. The facilities are purpose built already.
Tier 3 facilities or Tier 4 data centers. So
again, when people say Bitcoin miners can't do HPC, Bit Digital have gone and proven that they can do. And
because when you look historically, Tier 3 data centers are a lot more expensive than these regular Bitcoin mining facilities.
12 times more than a Bitcoin mining data center in terms of price, in terms of capital. Yeah, absolutely. Yeah. And hopefully what we'll see now is we'll benchmark what Bit Digital have done against what the likes of Hive Digital, Hut 8, Iris Energy, BitDeer, TerraWolf, all these miners I'm naming now are looking to get into the HPC and they'll say AI space. It's high performance computing that will lead to AI services. They're not providing AI, but they're providing the high performance computers for people to use to get AI.
Yeah. Perfect. Let's see here. Okay, next one is from Flux Capacitor 88. How are private miners able to grow with dilution, and is it sustainable for private investors? You got any insight into that, Anthony? I have a little bit of insight. I used to manage a mining farm for 5 years. It was privately held.
Yeah, you've got. I know of one big, and believe you me, some of these private miners are bigger than some of the public miners. So let's just say at Riot Platforms facility, they have a miner called Rhodium, and Rhodium have got 3 exahash. So Rhodium as a private miner, bigger than Argo. And bigger than probably about 4 or 5 other miners. But in terms of hash rate, bigger than Bit Digital, bigger than Sato Technology, all these listed miners. There's another miner in Texas that I've got to know really well called Cormint, and they're located a few hours away from the Riot facility, and I've actually included them in my analysis a couple of times. They're production wise and margin wise, they can compete with the big miners.
Okay.
I think with some of these private companies, it's like yourself. They've started from the bottom and grown it themselves. I mean, some of these CEOs out there that you look at have come into companies that were sort of already there. They come in because they've got this knowledge base of running tech companies and things like that. But what you find with these private listed miners is that they're there with their whole investment. They'll put all their money and energy into that company, so they want that company to succeed. Now, you talked about how can they raise money. They can raise money by certain placings, not big public.
Well, they can get investors in putting into the money.
They can get private investors in and raise that. Now, Cormint went out and instead of going to the banks and getting a dollar loan, they went out and did a Bitcoin backed loan, and very successful. And I think that gave them, I'm not sure if it was 10 or 30 million. And, that loan is going to get them to something like 2.5 exahash by the end of this year. So this is a private miner getting to 2.5 exahash, which again is about not much different from what Argo blockchain are at the moment.
And then just recently we saw with Swan, right? Same thing. They were in kind of stealth mode, and they're already at 4 exahash, getting to 8 exahash, something like that.
That's just, right? I saw that update like everybody else did last week, and I was like, it wasn't even on my radar. I didn't even know. I've been on Swan's podcast a few times. I've spoke with Corey. I was invited actually to be a speaker at the Pacific Bitcoin conference last year, but at that point in time, I'm UK based, and that's in Los Angeles, or just outside Los Angeles, Santa Monica. That conference, and it's a case of it was logistics to get there, plus also the fact that for a 1 hour speaking slot, it was going to cost me about $3,000 or $4,000 to do that, and you have to have some sort of income coming in to do this. So, I have been invited to the Bitcoin conference in Nashville as a speaker, so I will be making every effort to get there. I've already said I'll do that one, so that one's on the cards for this year, and I'm sure there might be some other conferences I get to. There's going to be a lot more I'm going to be able to do this year because of the things I'm doing at the moment, so that will help. But yeah, going back to private miners, they can raise money. I think it's a case of you have that sort of willingness to succeed with the teams that they've got as well, because they're all invested. And I don't just mean financially invested; they're giving everything into doing this.
Do you think they could actually go public eventually?
I think that. There's no doubt that
that's kind of their path.
Swan are going to go public anyway. Swan were looking to IPO.
Within the next 12 months.
They mentioned this a few months ago that we're going to do this. So that's sort of that's something to watch out for. And I think, they were looking at like a 9-figure IPO, so that's over $100 million. So, and when you're looking at the that talk of 4 exahash, if you look at a 4 exahash company, you're going to be looking, you're going to be looking. That 4 exahash is more than 100 million in terms of what companies are out there. I'm trying to think. Argo blockchain's over $100 million, or was maybe might be slightly under now with the recent thing, but $100 million.
Hive around there. Hive's around 4 exahash right now.
So Hive's about $250 million market cap. Hive have got a load of servers though, but so with that there, but also with all what they're doing, their publishing side of things, their news side of things like that, that's on top of the Bitcoin. So they could have a serious, and plus they're getting, a lot of airplay with this as well at the moment. So it's not like they're going out cold. Private miners, who aren't well known, it's always a challenge to raise funds. Is always going to be a challenge. It's how you go about it. But I think there's going to be more coming to the market. There'll be some more coming to the market, post the halving, because Bitcoin's, we know it's here to stay. So
and usually the miners try to come out when we have the bull runs, right? When things are going well, that's when they usually try to IPO. So I'm sure we're going to see a couple miners coming out public at that point. Next question is from, I'm hoping I'm pronouncing this right, Pogasus. We'd love to know why CORZ split into CORZ Z, CORZ W, and obviously Tranche 1, Tranche 2, and what that means. That's kind of a little bit above my expertise, Anthony. I know you might have a little bit, or I think you're looking into it as well.
Yeah, I need to really look into this. I've got a small amount of CORZ shares, and I've seen the way. I think on day one of the reverse the split the stock split where it went, for 10 shares for every one that you had. Sorry, one share for every 10 that you had.
Yeah.
And then the second day on my exchange, I then got these two warrants come through, because on day one I was like, I was nearly crying because I thought I'd lost 8% of my investment.
Yeah.
And then the warrants came through, and it wasn't as bad. But a warrant is effectively gives you an opportunity to buy a share at a future price, an agreed price in the future by a certain date. So they're giving you plenty of time to determine that. So the warrants do have a value, and they can be sold. I've reached out to Adam Sullivan, the CEO, to get him on the channel, on the podcast, Matt Nally podcast, and to explain it in more layman terms, because I went through that update when it came out, and I couldn't even put a tweet out about it because, to be honest with you, it was quite comprehensive, and it probably needs him to come on there. But effectively, there's three parts to it. You've got a share, you've got and two warrants, and everything, they've all got a value, obviously, and so you need to look at them in total to compare what your investment against what your investment was, because the warrants won't have a cost value; they'll have a value now if you were to exchange them now or sell them, and obviously the share price has a value. The share price has the value and has a cost value, but the cost value will be the original cost value that you paid.
Yeah.
So look at all three in totality to compare against your original cost, and that's how you can keep a track of, are you, how much in the red or actually how much in the green? Because bear in mind, if you'd have bought Core Scientific on sort of like early January 2023, when it was 4 cents a share, you'd still be sitting on massive profits now, even with what's happened last week. Massive profits. Yeah.
Yeah. All right. Well, hopefully you get time on the channel there, and we'll obviously look forward to seeing that.
Yeah.
And then last question we have here from the viewers was from, I'm going to try pronouncing this, Mary Johan 7127. Ask Anthony if he knows when the UK government will allow the purchase of BTC ETFs futures through FCA regulated British brokers. Most European citizens like me use UK brokerage firms to trade, and we're stuck with miners and MicroStrategy. Any comments on that?
I couldn't tell you a date. I mean, the UK are a bit more stringent on crypto and Bitcoin than other countries. Actually, they're putting safeguards in place. So I know that recently I applied for a business account, and I write articles and I do some analysis. I don't advise people to buy Bitcoin. I don't advise people to buy mining stocks. I just do the analysis. If you want to look at the analysis as a starting point, take it further, that's fine. But I actually applied for a business account and I was turned down.
Really?
We have to turn down for an account, and the grounds were like, "Oh, it's crypto. We don't." And I said, "But I'm not buying or selling crypto. I'm writing, and I get paid for my articles, and so why would I, But they just said it's because I put writing articles on Bitcoin and Bitcoin mining. It was it was a no-go. So it is quite stringent. And actually, I know some of the exchanges now. I think there was issues with you actually putting money from banks putting money into exchanges. If it was going into like Coinbase or something like that, there was limits on what you could do there as well. I think it's like Big Brother watching and trying to protect at the same time. So it doesn't give you the freedom to do what you want to do.
It's a little ridiculous at times, I think. We're old. We're old people, right? We have, obviously, it's our money. Let us do what we want with it. But I've seen the same thing here when I was managing the mining farm, when we were trying to get a bank account for that. Went to one bank. What are you guys doing? Well, we're mining Bitcoin. How does that work? How is the data protected? I'm like, there's no data with Bitcoin. We don't have anything on our servers. What do you mean you don't have anything on your servers? How are you making money? So I understand that completely. Yeah, it's a waste, unfortunately. And hopefully that changes over time as people get to understand more of what's going on.
I think as more. I mean, we're even seeing. I watch. I quite like watching. I'm not a fan of Jim Cramer, but I like watching CNBC. And actually, some of the guys on there are actually warming to Bitcoin now, because the fact is it hasn't done what Jim said it would do. He sold out when it was like in the 20,000s, and it's now at 40,000. And even he put out a tweet yesterday saying, "Make sure you sell your Bitcoin now it's at 42 before it drops off again," like that. So he's putting this stuff out there. So, but some of the people on them, them financial presenters, whatever, like now, are warming to the Bitcoin and saying, "Well, we've been cut." A bit like they did it with Tesla as well. When Tesla came out as a stock like that, they're all saying Tesla's no way it can do it. And it's just, It's just done exactly the opposite what everyone expected to do. It kept ramping up and got to a valuation that, it's now the most valuable motor car company in the world. And yet, it produces probably about a tenth of what Toyota produces, something like in terms of cars and all that. But it's got this massive valuation because people believe it's not just a car company; it's an energy company, effectively.
Software company, AI company, all that.
It's everything. It's everything. So Bitcoin's, it's the same. But I think the UK. I mean, the UK tend to sort of like look at what everyone else is doing. You've got them places in the world like UAE, where you think in the Middle East. You think they'd have some, really serious controls, but Dubai is like the crypto capital of the world now. It's like Texas for miners. It's like advocating, come to Dubai, and we support you. They do it, and you go to certain places now. I was in Turkey on holiday last year, and I came out of the hotel, and there was this little shop that sold goods and stuff like that, and you could pay for your goods, like things for the beach. Mats and towels and sunglasses, little bric-a-brac, $5, you could pay in Bitcoin. And so for me, it's that adoption you need. You need to get the adoption where people can use it as a normal, like we use Apple Pay, like we use, your cards on your phone. Nobody really carries cash anymore now.
Credit cards.
I've been to the ATM twice, I think, in the last 15 months or something like that. It's not I have like one place where I go and they don't take credit cards, so I have to have a little bit of cash with me, but it literally lasts me a year, you know what I mean? And so everywhere's on your phone, and we just need sort of like that adoption with Bitcoin just to sort of like
push it forward a little more.
Push it forward a bit more, because everything, the internet had its like this will never work. And mobile phones, when they came out, the telephone companies, when mobile phones came out, were absolutely saying you'll get brain tumors. It's going to fry all the fish in the Atlantic. All those cables that go from the UK to America under the water for mobile phones are going to fry the fish. It never happened. Yeah. And we're getting the same issues now.
But Bitcoin, it's used for scams. It's used for money laundering.
It's the banks. The banks are coming out and saying it's a scam because they know. I mean, my wife, is not from the UK. She's from another country, and so she sends money to that country. If she sends $100, they might get $85 at the other end. So $15 has gone in commission somewhere. Bitcoin will avoid that. Yeah. You send $100 in Bitcoin from here to that country, it's $100 when it gets to the other end. So and the banks are scared because it's profits they're going to lose. It's real profits. So
I agree. All right, that's all the questions I have from the users here. Do you guys watching right now, do you guys have any questions? Put it in big question mark or question in capital letters. That way we know what you guys are asking for. If you guys haven't seen Anthony's article here, we're going to go to this. Hopefully this works here. You have a bunch of charts that Anthony has provided in that article recently. He just tweeted about it today. So you guys are obviously encouraged to check that out. A lot of good data on there for it. And let's see if you guys have any questions right now. So let's go back to here. And let's see here. Waiting for a question. Anybody question? Okay, here we go. Question, there we go. So question, please ask Anthony, if BTC goes up 2.5x to 100,000, will Bitfarm, Cleanspark, and others go up 6x or more?
Ooh. I wouldn't know what the ratios would be. I mean, we're going to get earnings coming out soon, and I want to do some more analysis in this space. I know that you look at price earnings ratios to determine what it might be, but what we know is the volatility in price is bigger in the miners than it is with Bitcoin itself. So if the Bitcoin price got to 100,000, I mean, bear in mind. If you'd have sold your shares, I think it was like the 29th of December in most of the mining stocks, you'd have done really well at that point in time for 2023. When especially with the gains. I mean, anyone who bought mining stocks in 2023 should have sat on a profit at the end of the year, because literally all of them. There's only a couple of stocks that were below Bitcoin, and Bitcoin was 155% up in 2023. So the average was 508%. I did this the other day. Actually, I looked at all them stocks there. So the price, I don't give out price. I don't give out price predictions, but I mean, it wouldn't take a rocket scientist to work out that, you know, if the Bitcoin price went up 2.5 times, your mining stocks are going to do really well, because, you know, it's all about revenues. So the cost structure, as long as the cost of mining a Bitcoin, so you've got the biggest cost is the energy cost.
Yep.
And most of the companies have, you know, we get to know what they're paying for energy. So generally speaking, there are a few that are lower, but generally speaking, most of these North American miners are paying about 4 cents a kilowatt hour. There's a couple that are hosted. So Marathon are hosted at the moment. Yes, they've bought 2 sites, but they are hosted at the moment. They're probably paying close to 6.5, 6.7 cents a kilowatt hour, which includes the hosting fee. Bit Digital slightly, maybe 6.5 cents with the hosting fee, kilowatt per hour. And then you've got the likes of TerraWolf and Cypher, who pay less than that amount, less than 4 cents. They've got good deals there. So I think Cypher.
But Anthony, is that all-in cost? Does that include the transmission fees?
I'm just looking at the energy at the moment. I'll talk about the all-in cost,
Okay.
but the energy at the moment, that's your biggest cost. So, you know, that's what, as long as that energy cost stays the same, then you've got your operational costs. So the operational costs are your staffing costs, your G&A costs, your interest costs. And I look at it from a cash perspective. I don't, you know, stock compensation is important, depreciation is important, but they're not cash costs.
Yeah.
You know, you're not physically paying anything out for those. So I don't include them in my analysis, but they are important costs. They are accounting costs. Yes, you want to make sure, I mean, stock compensation is a direct dilution on shares. So if a CEO or a chairman are giving themselves significant amounts of stock compensation, it's worth considering. You know, I mean, bear in mind, this industry is in its infancy still. You know, the Bitcoin miners, public Bitcoin miners, have only been, the oldest ones have been around 6 years. So Hive and Bitfarms were the 2 oldest Bitcoin miners. They've been going about 6 years. That's still a new market, and some of these CEOs are thinking, you know, they're working for Apple sometimes. When you see some of the stock compensation that comes out, or Amazon or Google or something like that, it's getting like, you know, getting ridiculous. So the operating cost generally should be sort of like, I would say, pretty much fixed, unless you're growing massive hash rates and therefore your employee costs go up as well. So if those costs are fixed and your energy costs you can keep per Bitcoin at a reasonable level for your energy, at that 4 cents a kilowatt hour, if the Bitcoin price rises, you're going to be making significant profits at those levels. And so if you're making significant revenues, significant margins, then the share price will increase, because the market will look at that. It's all about future revenues.
Yeah, and I agree.
Looking at future revenues and future costs and making sure you're making a good margin. But bear in mind, no miner made a profit in 2023. I know Marathon had a net profit, but it was an accounting profit. I mean, you know, they transferred the loan into equity, and it gave them a positive performance. But other than that, it was literally a wipeout in 2023 for all the miners in terms of profits.
Yeah. All right, next question here. We'll try and get through these as fast as we can. Let's see. All right, this one here. So question, gold miners historically outperform the price of gold by 2 to 3x when both bullion and precious metals mining stocks are rising. What are the estimates for BTC miners' performance? I would think the same thing, right? We're seeing usually like a 2 to 3x, 5x multiple of what Bitcoin is doing, right? But it's also the same thing on the downside.
We've alluded to that in the conversation already. So, you know, Bitcoin price up 155% in 2023, mining stocks up 500%. So that's a 3x on Bitcoin.
Yeah.
And you know, if the Bitcoin price rises in 2024, and I don't know what the Bitcoin price is going to be in 2024. You know, ask me that. I haven't got a clue. It's going to be in an hour's time. Never mind tomorrow or the halving date or the end of the year. And if we all started guessing that, we'd all be. You know, if we knew what we were talking about there, we'd
have a crystal magic ball. We'd be billionaires by now.
Absolutely. But there is an expectation in previous cycles, 4 or 5 months after the halving, that the Bitcoin's price catches up, because
starts going up.
Revenues will halve overnight, effectively.
Yeah. Okay, next question. When do you think the ETFs will start buying out the miners to collect BTC in-house, and how would this affect the stock?
I don't think it's going to happen.
You don't think so? I don't think so either. I don't think the ETFs are going to be buying out miners anytime soon. Two different business models, 2 different strategies.
Yeah, I mean, if anyone was to come into the market, you'd think the energy companies would come in first, because energy is the biggest cost to all the miners, irrespective. It's not the mining machines, it's not infrastructure, it's energy costs. That's your biggest cost.
Yeah.
But after, if the energy cost now is, let's look at Iris Energy and TerraWolf put their energy costs on their updates every month. I'm going to say Iris Energy's energy cost per Bitcoin in December, probably 13 to 15,000 a coin. That's what it is now. So in 12 weeks' time at the halving, that energy cost becomes closer
Double.
to 26 to 30,000.
Yeah.
So that's a big cost. And if you're mining, a lot of Bitcoin, that's a big cost to find.
Yeah, and then on top of that,
and then
general
in 4 years'
administrative.
time, in 4 years' time, 30,000 could be 60,000.
Oh, yeah.
And so, not necessarily mining machines will increase at that rate, but the energy cost does increase at that rate because we know that. Yeah.
Okay, next question is from Hank. If you can pick only one miner today, who would you pick? Both of you, please. It's a tough question.
Hank's he's a big follower on the channel, and I know he supports Bryce and myself.
Yeah.
And we're grateful for that. If I had to pick one miner for 2024, from a self mining perspective, only, I'd go Iris Energy.
Okay. It's kind of what I was thinking too. I think it's kind of the most undervalued right now, but I don't know if it's being held down because they don't hodl anything, or if there's concerns with dilution going on there with the investors, why it's being down. But yeah, I would agree with possibly Iris Energy.
Interesting point. I know that I think it was early in 2023. I got yourself, Tom. I also got Invest Answers and Empire Building to come in and give their stocks for the year, and the only miner that all 5 analysts selected in 2023 was Bitfarms. So
in their top 5.
In the top 5, that was the only miner that was in everyone's portfolio. So we were all allowed to pick 5 each. I think I had Bitfarms, Iris Energy, Cleanspark, Marathon, and Riot, and the return on those 5 would have been something like 489% or something like that. It was a good return. It was a good return. It was a good return to have. You could have, if no one picked Core Scientific, that would have blown out the park. But everyone made really good. Everyone made really good profits. Artificial profits, because we weren't like putting our investments out there. But I'm going to put out something out, whether it's an article or whether it's an update as to how we all did, and see what the results are like. It's quite interesting reading. So that'll
be cool.
So yeah, and what we'll do is we'll do the same again, Seb, for 2024. I'll get the same people to do the same selections, $100 per stock, and let's see how the analysts are, and also let's get everyone else to join in as well, just to see who can beat the analysts. People are getting the knowledge out there. There's a lot of clever people out there now. People have done the due diligence. They know the stuff. They know the stocks. But yeah, you asked me one question. At the moment, it's Iris Energy. I mean, you could look at some of the really small caps, but I'm looking at a mid-tier miner that's looking to get into tier 1. So I think some of these smaller miners are going to have growth issues. How does a Digihost or a DMG or a Sato Technology grow bigger than where they are at the moment? Where does the capital come from? So that's going to be not saying they can't do it. It's going to be the challenge as we go into the halving. Capital's going to be hard to get for some of the smaller miners. But Iris Energy have already ordered their miners to come in the next sort of like 6 months. They'll get to 11 hexahash just after the halfway through the year, with an option to buy a further 9.
Yeah.
And so, and they're using some of their hodl. They're selling their hodl every day or their Bitcoin produced every day to help pay for this. So they're not tapping their ATMs like some miners are on a daily basis. They're using their Bitcoin yes, they are using an ATM as well, but if you look at their number of shares that they've sold, it's nothing comparison to some of the other miners.
Yeah, they're doing kind of a similar thing that Cleanspark was doing in the bear market, where they were selling most of their Bitcoin and then buying miners and things, growing their hash rate.
I don't disagree with the strategy of Cleanspark. Cleanspark are very open about the strategy. They said, we're going to sell shares. Yeah. End of. When people saw how many shares they'd sold, it was 113% of the company in the first 9 months of 2023. So they've more than sold the whole company's value in the first 9 months. And believe you me, when we see their next update out, you can start guessing what that number of shares is going to be, because when they submit their next quarterly update, on the front page of the quarterly update will tell you, as at that date of the update, how many shares are actually out there, outstanding. And so, it's not about what they sold up until the end of December. We'll know what they sold up until the end of February the 8th, which I think is their results day.
Yeah. Okay, next question here is again from Hank. Hank's got a lot of questions here, it looks like. So Hank is asking, Bitcoin moons, could this hurt the miners that are getting into the HPC business, high performance computing?
No.
Okay. I don't think so either. It's separate from the two.
It's not correlated. It's not correlated to Bitcoin price. So
maybe his question is more in regards to the capital that they're spending on those instead of going into Bitcoin mining.
Right. So let's be clear. Aidan Killick and Frank Holmes, the CEO and the chairman of Hive Digital, did a podcast on HPC, which is worth having a look at for those people that are interested to know what the potential is. The margins on HPC are significantly bigger than the margins on Bitcoin mining, and the level of energy that you need for HPC is significantly lower. It's that $50 million deal in Iceland. I think it's something like 3 megawatts of power. It's not significant.
That sounds right. Yeah, I think that's what I heard also. It's like around 3 or 4.
Yeah. I'm trying to remember all these numbers without anything in front of me. So, but it's a fraction of the energy. I mean, to attract 50 million in revenues, you'd be looking at 150 megawatts of power to get that sort of level. Yeah.
Yeah, one blade server runs probably like around, I think, 1,200 watts or something like that. So, yeah. Let's see. Next question here is, let's put this one up here. Oh, there it goes. Okay, so question: how many mining stocks to hold? Put it all in IREN, keep DCing into Mara, Cleanspark, etc. Put that money into a more and more beat stocks. Don't know what that is. I would say continue dollar cost average into other miners because you never know which ones are going to really do the.
Yeah, you first things first. That's my choice. That is Anthony's choice. That is not Kevin's choice or anyone else's choice. I mean, and I can't fault what Kevin's put there. I think you had Marathon and Cleanspark, I think, as well as Iris there. Mm-hmm. I bought some Cleanspark this year. Even I sold some in December, or I sold pretty much all my portfolio in Cleanspark in December, and got a really nice profit. And then the price just dropped, $7 and the $7, and I bought some back. I'm thinking it looks value again. So, Marathon as well. So there are lots of value plays out there. I mean, you have to think now. Cleanspark are, they're just going to go from strength to strength. Marathon are a beast at the moment. 2022 was a shocking year for them. You reported this, I reported this. All those miners, sat in garages for the best part of the year. But 2023 is a turnaround year for Marathon.
That was a fantastic year for them.
The great news is, and I hope the Mara pigs are listening to this, is that buying them 2 sites and starting having the infrastructure is the way forward. They've come to the party late, but they know that there's a real benefit of having that
control
over your machines, control over your contracts with energy. It's all positive. So I think having those 2 in your stock there, no problem whatsoever. I've got them in my portfolio, but again, do your due diligence.
Yep, absolutely, I agree there. Okay, this is kind of an interesting question. I think this one's kind of good. So Cleanspark peaked after 2020 halving, was smaller than its 2016 halving. Could it be ever less peaking at? No. So I think there's a misconstrued conception that they were mining in 2016. They were actually a microgrid company at that point. They didn't start mining until like the beginning of 2021.
3 years ago, I think.
2021, yeah.
3 years.
They bought the facility in December of 2022 and then got into mining in 2021.
Late to the party, but absolutely did everything right in terms of selling the Bitcoin at the high level when people were hodling and not selling it. They sold the Bitcoin, and then they've hodled when the Bitcoin price was low and it's grown. So, at the moment, everything they're touching, is got some sort of a Midas touch there. I mean, every mining company's made mistakes, and I could sit here for 2 hours talking about every mistake from every miner. But actually, Cleanspark seems to have learned from some of the things they've done there, and they're going in the right direction. I've got no issue with Cleanspark. No.
Yeah, me neither. But them getting to 32 exahash, that's going to be obviously challenging for them. They don't have the infrastructure in place right now. They can obviously build out the facilities that they do have, and they're looking to do M&As as well. So we'll see what that brings us this year to get to 32 exahash.
But they've got those orders in, so they must have a plan. One thing, Matthew, and Zach, they don't do things overly to rush. They'll have a plan somewhere. This thing about to get 16 exahash, they're going to be 8 weeks behind the curve. They were the only miner in 2022 to reach their growth strategy. every other miner who said what they were going to get to didn't get to their target, but they did. They got to 6 point. Their strategy was 6 in 2022, and they got to something like 6.6. And they've gone from 6.6 to 10 exahash in 2023, and they should have been at 16, but it's going to take a few weeks longer. But not like a year longer, not like 6 months longer, a few weeks longer. So I haven't got a problem.
Yeah, and they were upfront about it too. They came out and said months ahead of that, their electricity company is going to push back a little bit. So
yeah,
not a big deal there, I don't think.
And the analysts like Cleanspark as well. So if you look at these analyst updates, I think you put out a tweet the other day with the cancer report.
Yeah.
Cancer Fitzgerald, who one of the big analysts, and they cover quite a few of the miners, and they were very positive on Cleanspark, and they were even more positive on BitDeer.
Yeah.
So again, one of my potential picks for this year, if you're going to look at miners, look at BitDeer, look at BitDigital, look at Iris, Cleanspark, Marathon. You can't, Riot. So Riot, you can't leave Riot out the conversation, because although their production in 2023 has not been as great as everyone was expecting, they got 71.6 million in terms of energy credits for the year.
Yeah,
and that equates to 2,500 Bitcoin. So that's more than most of the miners. Some of the miners, that's more than I think Hut8 and Argo and that's just an energy credits. That's not in mining. They also mined nearly 7,000 Bitcoin. So when you add the 2.5 to the 7,000, that takes them close to 10. That takes them above Cleanspark significantly. Only Core Scientific, who mine the most Bitcoin, and Marathon can do that, but they've got significantly more hash rate.
Yeah.
Riot had effectively 10 exahash for the whole of 2023. So, their two facilities that had immersion cooling were knocked out for 13 months. I think December 22, literally just come online at the end of December 2023. So I'd be watching those as well. They've got a really low cost. In my analysis, nobody beat Riot in 2023 in terms of cost per Bitcoin. Absolutely nobody.
That's mostly because of their power credits they get, right?
Yeah. But that's a strategy. That's a strategy. They decided not to. They've got a fixed contract. They can run the machines round the clock. 3.9 cents a kilowatt hour. They can run it round the clock. But if they turn to switch off because they've got a potentially, they're going to get a benefit, they make a decision on return. Now, there are some questions as to why in November and December...
Why were they shutting down? Yeah. They're only making like 1 million or something like that.
It was small. It was like... Yeah. It was
it made no sense.
So that's what we need Jason and the guys at Riot to come out with. And I'm sure they'll be explaining, why. I scratched my head a little bit because I was expecting more.
Yep.
But they... On self-mining, from a margin perspective, and that's an operating margin or a gross margin... Nobody was getting anywhere near them. I think if we look at Q3, so we'll look at the 3 months from July to September, they were mining Bitcoin at about $1,000 a Bitcoin.
Yeah. Here's the power credits. No, I know it's crazy. All right. Next question here. Again, this is from our friend Hank here. Question: if you had to pick the most important metric, which one would it be on the miners? And I think they're all important to some extent.
Right. So, if you, one thing I'll say, and I think you've said it on your channel, I've certainly said it on mine, I've said it on Tom's channel as well. You can't take one metric in isolation, right?
Yeah, look at them all.
If you take away all the metrics, there is only one metric. It's revenue.
Yeah.
So it's about revenue it's about revenue you can achieve. It's about profitability. It's making sure your revenues are more than the cost that you're paying. That's the defining factor for all miners. Yeah. So we can put on there, Bitfarms in 2023 had the best production per exahash of all the miners. In 2022 it was Hive. In 2021 it was Hive. In terms of margins, Hive were top in 2021 and 2022 also. In terms of revenues, it's Marathon Digital outpaced everyone in 2023, and we look at December of 1,800 Bitcoin, and it's like they've just sort of blown everyone out of the park. Now whether they can maintain that, and buying that infrastructure will help them maintain because the control goes back to them. But we've known Marathon, they've had some what we think was like when they come out and say we've mined 1,200 or 1,400 Bitcoin, and then you start looking at what that looks like per exahash, and you're thinking actually it's 20% lower than some of the other miners, and you're thinking why? And then you read back through the report, and it's like we didn't get full capacity at this site, and they've got
curtailing basically
quite a few sites, and so
And that's important, I think, also because that also helps look at the miners that, or at least I look at it this way, that if a miner is operating uptime close to 100% as best as they can, they're going to be able to basically pay off the machines that they purchased a lot faster than somebody that's operating at 80%.
Yeah.
So
And
that's the way I think it.
That will be the question against Riot. You know, if their uptime's not as good as everybody else's, what's their return like on paying back that, you know, on paying back
Yeah,
that
so it's
investment?
going to extend out longer, right? Unless they're able to apply the power credits for those months, and then it gets a little bit more tricky. Okay, next question here is from T. Do we see SDIG moving higher, and will they implement the carbon capture tech to help mining? They have low market caps, so move fast. What do you think?
So Stronghold mining. I don't cover in my analysis. I do have a small number of shares in Stronghold, and the last time I looked, I was actually still in the green with those. It might be slightly red now, but again, they're in my portfolio. So go on the Patreon and look what I've got there. But they have still got debt on the balance sheet.
Mm-hmm.
But they've got, I think it's like 4 exahash now, and they've got a plan to increase that in 2024. They've bought some miners that'll be arriving imminently, so that gets the hash rates going up. I did an article about Stronghold, one of my first articles, I think, for Compass, actually, about, you know, what they're doing with regards to using this waste coal.
Yep.
To change those sites into green sites as well. So there's a positive spin on this for Bitcoin.
Yeah.
Because we get a lot of things out there that are just totally wrong, and it's nice to have a good story. I think, I mean, from a valuation perspective, if you look at and I don't look at market capitalization of value miners, look at enterprise value, because you need to look at the debt, you need to look at the cash on the balance sheet, you need to look at the Bitcoin held. So when I do an enterprise value divided by the amount of hash rate they've got, they score really well. So that means that from a value perspective, you know, the cost of their exahash is a lot lower. And I know that you did a video on this, and I did an article, and I think I might have done a podcast with Bryce on valuation. Mm-hmm. And the two miners that were at the far end of the table, that were sort of like, from this metric only, overvalued, were Marathon and Cleanspark, because they'd had such a good run. You know, at that point in time, I think Marathon were like a 5-6 billion market capitalization, and Cleanspark were 2.5 billion. Well, when you have that great run in stock price and market capitalization, that's going to sort of like impact on the value of your hash rate. You know, it's sort of like it's spiked. Yeah. Stronghold, because the share price hasn't been great, it's got a really low valuation. So I think that, you know, I think Marathon, I looked last week, I think Marathon and Cleanspark were around about, I think Marathon was just over 100,000 per exahash, and Cleanspark weren't that far lower than that. And Stronghold was sort of like probably around the 20,000 per terahash. So it was a lot, significantly less. So 100,000 for every terahash of Marathon, and 20,000 for every terahash of, sorry, let me get this right. 100 million for every exahash of Marathon, and 20 million for every exahash of Stronghold. So
but there's reasons for that, right?
Significantly less, but Stronghold have this debt, and when you have debt, you've got to pay the interest and the capital. That's going to be the problem. You've got to have cash flow in to pay that.
That and their operational costs themselves. If you look at some of the fuel costs, other things, you include a couple of things in there, it's already over what the revenue is. So that's tough to.
You've got to remember what these miners are paying for mining machines now. So with all these miners that put the massive orders in, it's been around $14, $16 a terahash.
Yep.
If you go back to the end of 2021, December 2021, remember the date, Stronghold put an order in for miners that would arrive within 10 days, and they paid $80 a terahash.
They weren't the only ones
arriving. And miners are now picking up mining machines that are more than twice as efficient, meaning it costs twice as less to mine a Bitcoin, and they're more powerful for like 20% of that price.
Yeah.
So, you know, and bear in mind, Stronghold weren't the only miner that did that. There was a number of miners that done that. And, you know, so if they can get some movement on the debt, I think they're definitely worth doing some more research on.
And I think maybe the carbon credits will also help. If they can get the carbon capture system going up and running, I think that might help.
And they can sell those credits, can't they? Is that what the point's been made? I think they can sell the credits, and that brings in a revenue stream for them. So I think it's the challenge is, as we go into the halving with revenues dropping, who's got the runway to go through, who's got the cash runway, and some of
To
these
with-
smaller miners,
Yeah,
it's
to withstand a
gonna be
couple months
more
with
of a challenge.
Bitcoin being possibly in the dumps while they're not making any revenue. Yeah.
Yeah.
Okay, next question here is, I think we already answered this one, but we'll put it up anyways. Question, why does Anthony think IREN is not tracking with the rest of the miners?
Well, I mean, they're an Australian mining company. So bear in mind, you go back to when, go back a few years ago, and the first two miners to list on the Nasdaq were Riot Platforms and Marathon Digital. And by listing on the Nasdaq, they got all that influx of money from America. They're two American miners. The US love American companies, and so when you compare those two companies to some of the Canadian companies that have been mining longer, and you look at their market capitalizations, there's a distinct difference. So I think it might be the fact yes, all these miners, all the big miners are listed on the Nasdaq, but not all of them are US companies. And if you look at the sort of like the volumes, although saying that, Bitfarms has had good volumes, but Cleanspark, Riot, Marathon have great volumes of shares every day traded. Iris Energy don't have starting to get into sort of the millions per day, but bear in mind a year ago you were looking at probably less than half million shares traded a day in Iris Energy. But when you look at Marathon and Riot trading 40 50 million shares a day, and Cleanspark's probably doing 20 to 30 million, these are US companies who the US public like that. So that's the biggest market. So that would probably be one reason. From a technical point of view or fundamental point of view, I can't work it out why, because they've got through the issue they had
With the special purpose vehicles.
Yeah, I say they've got through that issue. We've yet to hear that it's totally gone away. I think there's still some litigation between NIDIG and Iris Energy.
Yep.
And I know lawyers are probably working around the clock to sort that problem out there for them. So hopefully we'll get some sort of an update earlier this year when they come out with their earnings. I'm hoping Dan gets a question about that issue, because if that issue gets sorted out, and even I think if I remember rightly, the worst case scenario, I think the judge said they had to pay something like $11 million or $12 million to NIDIG or whatever, because there was a value on the Bitcoin that had been mined. So, even if you pay that out there, they've still they still walked away from it with a good deal, because they handed those machines back at sort of like 60, 65 million in value, and the loan was at 103 or something like that.
Yeah,
so
they paid pretty penny on those. I think they were over like $60, $80 per terahash that they were buying those at.
Yeah, so if that's sorted out there, I think but yeah, it's definitely undervalued. But if you look at a lot of people out there, I mean, obviously, Mike Alfred is a director. He's on Twitter. He's been sort of like pumping the stock lately, because I mean, and whether it's appropriate for a director to do that on Twitter, that's down to them. But I think it's undervalued. I think people need to do more due diligence and look into Iris. I really do. I think when you compare it to some of the other miners, they're the value play at the moment of the mid tier.
Yeah, I agree. I think there's a couple of things that might be playing against it. I think maybe the hodl, right? That we can agree or disagree on.
They don't hodl, but I mean, half the miners don't hodl now. So
I know.
They have stuck to their guns from day one and said we're going to use the money to grow. And if they can get those machines and get to 11 exahash without killing all the shareholders, so people say, yeah, but Marathon have got 15,000 Bitcoin on. Someone said today it was like 16,000 now. I mean, I know I've got access to their wallet, but I don't look at it every day.
But they also purchased like 4,000 of those part of it.
But they sold their company more than twice to get to that position as well. So the shareholders, their actual shareholding in the company has been diluted so significantly, and so when people ask questions, when's Marathon going to get back to $80 a share? It might never get back to $80 a share unless the Bitcoin price goes ballistic, because it got to $80 a share when there was like less than 100 million shares outstanding. Point, yeah. It got to 8 billion, so there was only 100 million shares available when it got to 8 billion, because it was $80 a share. If it got to $80 a share now, the company valued at something like 20 billion, because there's that many more shares out there. Now, the company today is valued at about 4 to 5 billion. So it means it'd have to go up 4 times its value at the moment. So what would Bitcoin price have to rally for that share price to increase by 400% this year, having gone up by 700% in 2023?
Yeah.
There's only so many years you can keep exponentially growing. We're not going to get 700% every year from these miners, because most people, and I'm going to say most people, and most people on this call now, on this podcast now, are probably in the red in most of their mining stocks. I guarantee it, because 2021 wiped out people, and 2022 wasn't any better anyway. The end of 2021 into 2022, if you hadn't sold at those highs mid-year or sort of like October 2021, then you're sitting on some red positions at the moment, because the stock prices went down for all these miners by about 80-90%, and some of them, Core Scientific, went down to 99% down.
No.
Argo blockchain probably out 95% down, and those were really popular stocks. Argo blockchain was massive in 2021. It was one of the highest traded stocks on the UK stock market, really, that year. It was massive, and it had a popularity. And Peter Wall, the CEO, he came out. He was doing more podcasts than you were.
Oh, jeez.
Honestly, he was coming out every week with a different podcast and answering questions, and all that, and it was great. Shareholders loved it. They were sending the questions, and he'd stand up there and answer the questions like that, And it's great when Bitcoin price is rising. We all want to do that. We all want to talk when the Bitcoin price is rising. But me and you stuck it out when the Bitcoin price was dropping every week, and we carried on doing what we're doing. I don't tend to sort of like, I'm not looking at the Bitcoin price every day. I mean, me and Bryce will be chatting on the podcast, and I'm like, "What is the price today?" I didn't bother looking today, and he'll say, "Yeah, some of the miners are green." So I'm not looking every day.
You're looking at the long term.
I make a decision, and I might look every week, but I'm not looking every minute at my phone thinking, "What's the price?" So people have just got to be a little bit patient, and when they do see a profit, make a decision to maybe take some money out and save it for that day when the
absolutely. There's no
down.
shame in taking profits. What we do, what I do, is obviously different from what you guys might want to do. So I totally agree with that. But other thing with Iris Energy, I'll just cover this, is the reporting only every 6 months. I think that might be also keeping them back a little.
That's I mean, I've spoke to I know most of their team now. I've been dealing with Iris Energy for the last few years. Dan approached me over 2 years ago and asked could he be included in my analysis. And so he reached out to me, and they've been in my analysis for just over 2 years. I think it's like November 2021. I think they listed in September that year. Mm-hmm. And bear in mind, Iris Energy listed and the stock price was $24. Stock price today is probably, I'm going to say it's between $4 or $5. Yeah. $4 or $5. So those people who got Iris Energy shares from when they listed, they're still sort of 80% down. And bear in mind, Iris Energy shares have been diluted since then.
Yep.
So people who bought Marathon when it was say $50 or $60, even not when it's at the top. When's Marathon going to get to $50 and $60 a share again? It got to $30 late in 2023. And then it got down to sort of $17 within a few weeks of 2024.
50% pullback, like the rest of the miners.
50% pullback on all these stocks,
which I think was kind of healthy, kind of needed. But yeah, let's get into the next question here, because I don't want to keep Anthony too much longer. We've already gone over an hour here. So let's see here. Anthony, okay, question. Merger and acquisitions. Who will buy who? Speculative targets. Do you think anybody's going to be buying out anybody?
Oh, yeah. I mean...
And there's another question that goes along with it.
The Halving's going to sort out some of the miners. I mean, people are not going to like this, but I think Argo blockchain could be one of the first ones we see something happen in that space.
Yeah.
We talk about preparing for the halving. So preparing for the halving, get your costs down. So, cut costs.
I've been pounding that for all year.
Costs, get the best energy contract you could be in, reduce the bonuses, just cut everything down as you're going into the halving.
Get as lean as you can before the halving.
Be as lean as you can. Have you got the best mining machines out there? If you've got S17s or S9s, you're not going to be making money with those miners there. You need to have the most efficient miners that you can buy. So it's going to be the high spec S19 models. There are some at 120 terahash second. The XPs at 140. Miners are now buying the S21s, T21s. there are going to be more mining machines coming onto the market later in 2024 that will blow the T21 and S21 out of the water as well. So, we just when we thought the technological line was going to be, leveling out a little bit because we've been jumping technology so quickly, it's going to go ballistic again, I think, in 2024 in this space. But those miners who, and it's generally going to be the smaller miners. I can't see the likes of Riot platforms. If the Bitcoin price went down to 10,000, Riot platforms are going to outlast everyone because they've got the right level of cash on the balance sheet. They've got a significant they've got a significant Bitcoin hodl, which will be affected by the Bitcoin price, but they've got a load of cash on the balance sheet.
Yep.
They're forecast to outlast everybody, even Marathon, because they've got no debt. So Marathon have still got debt. Marathon have got a great cash run as well, so they're going to last a few years.
Oh yeah.
Cleanspark started to build up their hodl. They got over 3,000 Bitcoin. I don't know how much cash they've got on the balance sheet. We'll find out in literally just over a week's time because their results come out on the 8th of Feb. But some of the miners, Argo got very little cash. So I think they did a raise a few weeks ago. Was it $10 million raise?
$8-9 million or something like that.
Yeah. So that, how long does that last? Their Bitcoin hodl's down to less than 20, I think, at the moment.
Yeah, it's keep going down.
That's hardly 20. That's 800,000 at today's price. So maybe they've got 9-10 million in cash. It's not going to last long.
No.
So
and they keep selling more Bitcoin than they actually mine each month, which is they're spending more than they're actually making. Basically,
they got a stay of execution. I think you might remember this, Sebastian. I remember their media team actually by mistake put out we're going into Chapter 11 on the website, and we all saw that. Yep. This was like the same week that CORZ Scientific actually went into Chapter 11. So Argo were going to follow CORZ Scientific in because they were at the knife's edge, and they'd only had that site for about 6 months energized. So it energized in May 2022, and in December 2022 they closed a deal with Galaxy, who came in, bought the site for 65 million.
Yep.
Also cleverly gave them a 35 million loan collateralized against the 2 exahash of machines that were based in the Helios facility. So if you default on that loan, the machines just become part of Galaxy, and they've got the site to put them in. So it's a win-win for Galaxy.
Yep.
So if you say to me which miners are going to struggle, I think they're going to struggle. You're going to see challenges with all those small miners, how they get through.
I see Mawson possibility as well.
Sorry,
Mawson as well. Mawson infrastructure.
Mawson, yeah, Mawson are a small Australian miner. Again with debt. So any of these miners that have got debt.
Which leads me into my next question here that we have. So, do either of you think it would be or make sense for Cleanspark to buy a Stronghold or Mawson? I've said this before. I think Mawson might be a pretty good bet for Cleanspark. They bought their facilities before from them. They have a good relationship there. So, and plus Mawson is supposed to be building out their infrastructure out there. They have some megawatts that Cleanspark is going to be needing.
Isn't there? Don't Cleanspark? Didn't Cleanspark buy some of Mawson's?
Yeah, Sandersville.
Yeah, and I think there might be some. Wasn't there some sort of delay in payment or something like that? Might be part of the reason. That's part of the reason maybe that Cleanspark haven't been able to energize or get their 16 exahash in the time frame. Whether it's a Mawson issue, I don't know. I read something that there was
$2 million or something like that.
$2 million was holding back everything like that. So, but again, I don't sort of like look at every tweet and think it's all truth. I mean, people put spin out there about Cleanspark, generally get things right. They've got a good team there. I like Taylor, who's the chief mining officer there. He knows what he's doing. No, I don't think. I mean, at the end of the day, if some of these companies came up and it was a real fire sale, then of course they'd buy. But they won't buy them as companies now. That the valuation would, it would just be practical to buy them. But if it was like a fire sale where there was like we're going into Chapter 11 and selling off parts of the business, absolutely, some of these, some of the companies would go in there. But they're not going to go. I don't see like Cleanspark buying Mawson,
not the whole company. I think more maybe like some of their infrastructure that they have, some of the sites, maybe, but not the whole company. I don't think you want the debt.
You mentioned this at the start of the conversation. What you might have is some of these non-public miners going in and buying a miner that's distressed, and avoid them having to go through their own IPO. They can buy the company and then take over the company.
That's an interesting thought.
that's that's a possibility. And there are some big non-public miners out there. I've already mentioned Rhodium are a big public miner. There are other big public miners out there as well that are just looking to go public. You've got to have about $10 million in fees. It's not cheap.
Yeah,
it's a lot of money, a lot of legal money, a lot of money to go that way. So
a lot of money to the bankers.
Buy a miner, and some of these miners, valuations under 100 million, and avoid paying that 10 million. That's something to think about for a non-public miner. But I don't see a Cleanspark, a Riot, or a Marathon buying a miner whole as it sits at the moment. If it's in Chapter 11 and they have to sell off the parts of the business, I think a lot of miners will be going in there looking what they can get at bargain-based prices, which we saw with Celsius. If you look at the Celsius assets there, we looked at the assets by Hut 8 have just bought a load of assets from their previous energy supplier in Canada.
Yep.
Validus. So they didn't buy they bought the assets that were in bankruptcy, so they got a really good deal. They did it for like a stalking horse, and they were able to put some bids in, and I think they got everything they bidded for. So they've got some some sites and potential there to grow that. So that's what you might see, but I don't see any companies getting bought out in the current state they're in at the moment. I think it's going to be a case of if they're in distress.
Come having an event, I think that's going to really show which ones.
So if Argo run out of money, they're going to have to make some really, and we're talking, it could be months away now from that, literally, because cash is running out. They've still got, at my last count, was it over 60 million, 70 million in debt, which is significant interest payments. Bitcoin price probably needs to be a little bit higher to cover that and their operational costs, and give them a little bit of runway, because how often can they do this sort of like dilution every sort of few months? As soon as they dilute, they haven't got an ATM, so they can't just do what Cleanspark are doing and selling shares every day. They go to the market and say, we want to dilute, and it's like a 20% reduction. You've got to offer a discount. And so the share price, they diluted. The share price was at 30, it went down to like 16. As soon as they announced it, 50% of the share price went. So that's a chance. I think Argo will go this year. I think Argo are on the last legs now.
Yeah, Argo's on my list that I thought might be one of those that might be in trouble. Mawson's the other one.
Mawson, all these smaller ones are going to have a challenge. All of them. There's not like no one's exempt. Bit Digital with that contract will be exempt.
Mm-hmm.
They'll be able to outlast this because you're getting that much revenues in there with great margins. It's going to cover the Bitcoin side of it. And if the Bitcoin price does rally in a few months after the halving, Bit Digital is sitting pretty. They're all right. It's these other miners that haven't got any backup who are going to have to make decisions before the price rises after the halving. That few months, it only take a few months when the money stops coming in, and they've got to pay the bills, got to pay your energy provider, got to pay your staff. Can't pay those costs there, you're going to be, in trouble.
In a world of hurt. Yeah, I agree. All right, final question here we got Vizzy here. And this is, has anything changed with CORZ energy prices? Do you expect them to survive much longer despite coming out of bankruptcy? I have not heard anything about their energy prices. I don't know if you heard anything on that. But with them coming out of Chapter 11, I think they're going to be fine.
All I'll say to you about CORZ is CORZ will have come out of Chapter 11 strong and will grow.
Yeah, I agree there. All right, so that's it.
They're going to be a beast. Adam as a CEO has already shown in the first 6 months he's been in charge that he's sort of like got the companies changed. They changed the focus on where they were spending. I mean, 2022, these guys were flying around in private jets, they were Apple or Amazon, and then they weren't. They were Core Scientific. And
hosting was not profitable for them. They were just spending way too much money.
They were just spending money, but now he through necessity and to prove to all their lenders they've got to be really lean, and so you're not going to see sort of like massive bonus payments out there. But they're going to, I think, they mined all through Chapter 11. They mined, people won't really, they see from a graph there, they mined more Bitcoin than Marathon last year.
Yeah.
So they're a big mine. They mined 13,500 Bitcoin. Marathon mined just under 13,000.
Yeah.
Going forward, Marathon have got a more hash rate, so naturally Marathon will mine more in 2024 because although Core Scientific are growing in hash rate, they've grown, I think it was like nearly 2 exahash in December alone. It went up from 15.2 to 16.9. I think they've got orders in to get them to about 20 because Bitmain own 5% of Core Scientific now.
Yeah, so they did a
Now,
deal there where they're going to pay
that's
some
really
in cash.
interesting.
And
If you're Bitmain, you've got a 5% stake in a company, you're not really wanting to fail.
no.
So Core Scientific are possibly going to get some really good terms on how they on their machines, because it's a win-win for Bitmain as well as the company. Both do well out of it.
And also,
So
Bitmain's going to
I
be hosting
see,
some more machines with Core, and then Core's buying machines for themselves as well. So that's a pretty
yeah,
sweet deal that they have there.
and do Core Scientific, like Riot will do. So when we look at host companies, that, I mean, Riot will categorically tell you every result they come out, their hosting business is non-profitable.
Yeah.
They don't even make a margin after their energy price. So their energy price is higher than the bitcoins they're actually mining. It's just a non-profitable business. But because they bought that site with legacy contracts, they couldn't get themselves out. Legacy contracts have got a few years left to run. So we're going to see this for the next few years where Riot have got problems. Once those legacy contracts are finished, Riot will give termination to all that. I think they've already terminated a couple of contracts already. But they've got rhodium still there now. Once the position where they can terminate that contract, they will do, and they'll make it self-mining at Whinstone. So they've got plenty of capacity to grow self-mining there and at Corsicana.
Yeah.
Core Scientific have got equally a big hosting business at their sites. I think it's like over 6 exahash. So that's like they've got like a mid-tier miner hosting business.
Yeah.
And as well as them being like a tier 1.
And that's changed for them too. Recently, it's been actually becoming more profitable for them. So
their hosting business does have a margin. So as an accountant, if a business provides a positive gross margin, what you have then is you have a contribution towards your overheads. If you are not contributing towards your overheads, then effectively, as an accountant, you need to turn off the energy, because you're spending more money actually having the machines on than you would if you didn't have the machines on. So, if you're spending, $1,000 on energy, but your Bitcoin mining only comes in at $900, you're losing $100. If you didn't do anything, you wouldn't lose anything, but in both cases, you've still got to pay the staff. So if you're bringing in a small margin, you can keep the miners running. And that's what Core Scientific have got. They do make a margin. It's not a great margin, but they make a margin on hosting. So it's probably better to have the money coming in, because the staffing cost is across self-mining and hosting. So it covers it's one staffing bill. Yeah.
I agree there. All right, so I think we'll call it a day there, guys. Thank you so much for coming in, Anthony. Again, thank you so much. I've really enjoyed this. I hope we can do this down the road again sometime.
Yeah, definitely.
So anything else you want to add, Anthony, before we call it a day?
I think it's going to be interesting next 12 weeks as we get closer to the halving. We've seen 4 or 5 of the big miners just sort of like literally putting these big orders. There's like what we're seeing in 2024 now. We're going to see a sort of like a divide now between the miners that are probably going to make it and the ones that are going to be really trying to chase a losing race, because it's the challenge of the halving is it's if the Bitcoin price doesn't rise, some of these miners are going to have problems. And although I haven't seen all the assumptions that Cantor Fitzgerald put in their recent article dated the 25th of January. I do my own analysis, and they use the same numbers I'm using. I'm not making up numbers. All the numbers I get are from their 10Qs and 10Ks for all these miners, and I know you do a similar analysis as well. I'll start doing this analysis over the next month or so, because all the results are coming out in February and March, and we'll have a great baseline to look at what happened in 2024 as a whole then, because it's the figures up to December the 31st. So we can review financially what happened in the whole year. And it will give us a little bit more guidance on what's happening going into the halving from an operational cost. So it's about keeping those costs low. Your energy costs, you can't get around that unless you've got, you've got a deal for energy, and your deal is, you mine at however many cents per kilowatt hour. But your operational costs are something that you can control. You can control the amount of staff you've got. You can control an element of how you pay bonuses. You can control on T&S costs, travel and subsistence costs, legal fees, professional fees, marketing. So you can keep a lot of these costs down. You can work on that. Especially when times are difficult. Once the Bitcoin price rallies after the halving, it gives you a little bit more breathing space. But you've got to get to that point when the Bitcoin price rallies. If the Bitcoin price rallies before the halving, all these questions that we're having now are all irrelevant. miners are going to do
The
great.
only thing that might change on that is the network hash rate. If the network hash rate sky jumps up, that's going to be also a concern there. So it's a balance.
As long as it's profitable, Sebastian, you said exactly right. People will switch on the miners. If they're making some money, they'll switch on the miners. And I think, you were probably asked at the beginning of 2023. I was certainly asked. All the analysts were asked where they thought the global hash rate would finish at the end of 2023. And most of us were saying 375, 350. Yep. I don't think anyone said 400. That was a bit optimistic. Bear in mind, it was at 240, 250 on January the 1st.
Yep.
So, when no one's trying to say it's going to double, well, it did double. It went up to, it reached actually, it reached 660 or something like that during the year. So, and then it is volatile. I mean, you can tell that miners are getting switched off every day in locations because the hash rate at one particular time could be 660 and a couple of hours later it could be like 500. So, 20% of the hash rate could go in a couple of hours when machines are turned off. But the fact that hash rate, if you look at the line of that graph of that growth throughout the year, it means that miners are coming online all the time.
Yep.
And we're only focusing on 30% of the miners in the world. We're only focusing on North America. There's 70% more mining machines outside North America that we don't even follow. And who knows what's happening with those? Are they growing in size like your Marathons, like your Riots, like,
Are they changing out their machines from the older...
Speculation in the Middle East about, these companies out in the Middle East that are growing, hash rates and putting money into Bitcoin that were just mind-boggling amounts. And we don't know. The next thing we'll hear is that some sort of energy company has gone and done a swan and comes out and say we've got 10 exahash or something like that and blows the space, sort of like, because at the end of the day, I'll tell you now, the winners in Bitcoin mining will effectively have to get close to zero cost in terms of energy for it to win, because you can't have the energy cost keep rising. It's just not practical. So what will happen is miners will have to look further and further away. They are doing at the moment South America, Iceland, Africa. I'm getting phone calls from Africa saying, can you put me in touch with miners? We've got energy contracts here where we'll do the all-in cost 4 cents a kilowatt hour. And if they're doing the all-in cost at 4 cents a kilowatt hour, do you think if Marathon went there, and they won't be paying 4 cents a kilowatt hour with the size of that company, they probably want 2.5, 3 cents a kilowatt hour. So what I'm saying is that the price is going to get dragged down to where the cheapest energy is around the world. It could be anywhere where there's hydro. So look at the big dams and all that. Africa, it's on sort of like, is it the east coast of Africa, where you've got villages of just hundreds of people, and they've got all this power that they can't use. They haven't got all the technology that requires the power that they have in the Western world, but they've got all this energy that they can't really do anything with. So the Bitcoin miners are going in there, using that energy, paying money back into the local villages, and the money's being used to develop the villages like that. So that's a great story, rather than Bitcoin's using the same amount of energy as the likes of Finland or Norway or whatever country they decide to name next. Could be the UK next or whatever like that. But we need to sell those good stories.
Because when you look at the electricity going through a full day, 24 hours, there's only peaks where you have it really demand on at like 3 hours in the morning and then 3 hours in the afternoon, right? And then the rest is just pretty much down.
It's flat. It's flat. Yeah. This is why being part of the 4CP in Texas is really good for miners, because if they agree to turn off when those peak hours are, not only are they sort of like not paying high levels of costing, but they get benefits by turning off. So they have like reduced transmission fees for the likes of for Riot platforms and for BitDeer. They also get the ability to sell energy. I think Iris Energy as well can sell energy back to the grid and benefit from that. But yeah, no, it's. I think 2024 is going to be interesting times. Let's hope all our expectations are met, and let's hope we can do this again soon, Sebastian.
Yeah, absolutely. I think that one thing I love about the Halving event is that kind of like a cleansing of the Bitcoin network itself. You get all the inefficient miners, they're going to be pretty much wiped out at that point. So it makes the network itself more efficient over the long run, which I think is a good thing for not only for Bitcoin, but also for the Bitcoin miners and the community in general. So again, thank you, Anthony, for this coming on. I definitely appreciate it. We'll hopefully do this again in not too long of a distance future, not another year, but we'll see how things go. Again, wish you all the best with Patreon, and then obviously your work with Bryce and everybody else. So thanks again.
Thank you.
Everybody else, I hope you guys enjoyed it. If you did, hit the like button, subscribe, helps me out, and I'll see you guys in the next one. Bye.